Hello, hello. Good morning. Welcome back to Market Wake Up. My name's Jordan. This is John that way, and you're watching Market Wake Up, the one-stop shop to get up to date with everything you need to know. And it's been a big morning for you, John. It's been a big day for me. The markets are moving. There's lots of stuff to talk about. Trade wars are back, baby. Trade wars are back. Tariff wars. Let's get into it. Market Wake Up. Let's go. Well, I just feel at home. We're back where tariffs are in and the market doesn't make sense. And I'm just late 2024 again. I feel like I'm sliding straight back where I need to be in a fine balance between confusion and just straight up tired of the markets. John, how's your morning?
Pretty hectic, I'd say.
I
have been... I didn't get to sleep till quite late last night because I was just kind of interested to see how the market would open. I did my week ahead report and I was like, okay, this is going to be a bit of a rocky start to the week, I feel already, because we had obviously Trump announce on Friday that he was going to start tariffing and it was going to be 25% Mexico, Canada, and then 10% on China. Maybe there's some kind of positivity to that, I don't know, but 10% to China, and I was like, okay, this is interesting. And then I watched Trudeau's sort of announcement of how he's going to then come back and tariff, and I found that very interesting. He was very hard hitting on the emotional side of how this is going to impact everybody, and how, the fact that Canada has been such good partners with the US over these kind of big historical events, and he was talking about 9/11, he was talking about sort of
fighting in Afghanistan and
everything like that. And I was just like, wow, this is kind of like this is here, and this is a guy that's on the way out. This is a guy that's on the way out. So
you got nothing to lose. Old mate could just go guns blazing, but no,
exactly.
He played it. Yep.
And I thought he did quite well in his speech. But yeah, it was interesting to kind of see that unfold. So I was like, right, okay, I want to see how the market reacts to this, because I had a dollar Swiss long that I held on the close. And I was like, oh, okay, this is going to be one of those where, am I going to get slipped here on something? And I was like, right, I'm going to wait how this one opens. I was fairly positive the dollar would be stronger on tariffs, because that's what we've seen. We've seen a lot of, any time that he announces tariffs, dollar gets strength in that. It's when he starts kind of revoking them or kind of coming back on his word, that's when we start to see the flip where the dollar starts to weaken. So I was quite confident going into that open, but obviously you never know in that moment. But it did go positively, it rallied into the highs. I actually just took some profit off.
Have a listen to him, just join the stream. Just made a bit of money here as I'm talking to you, Jordan. These tariff conversations, I saw them coming. I was part of it.
But this is the kind of thing that we've kind of spoke about. I mean, we talked about it in the newsletter. I dropped a little piece in the newsletter about dollar Swiss potentially kind of resuming that trend of moving higher. I still like the idea of being on the bullish side of the US dollar at the moment. But obviously we'll see how it's gone. But yeah, I didn't get much sleep last night, put it that way. I was up at 6 then, just kind of again, just checking my position, seeing where we're at, what's been going on. And it just seems like the market has, put it frankly, shit the bed, right? It's just kind of...
That's my language. Now you're talking in a way that I can understand. I'm starting to digest what it is.
Other than that, my morning's been all right. How's your day been? I bet you've been seeing this kind of just unfold throughout the day.
Yeah, it's been fun. It's been fun to watch. It's been fun. The market reaction's been an interesting one to me. I've not taken part. I've merely sat and wanted to watch. And everyone else waking up this morning or joining us, let us know how you're interpreting it and what you're seeing across the charts. But for me personally, I think it's interesting. I think it's really interesting. Now, we were going to do a big bite today on the Great British Pound. Right, but I think I'm fair to say I want to touch on this. So we might talk on this for a little bit longer than usual, because when a breaking news story like this happens, this is what I want to dive into.
Yeah.
So it all started when obviously Trump come out 25% on Canada, 25% on Mexico. Now he's excuse for the Mexico tariff was drugs. He essentially said, you're causing the fentanyl crisis that we have, so we're going to tariff you until you fix it, which didn't go down well with the Mexican government. They've come back going, outrageous. You should tackle more money laundering. You should tackle more what's happening on the streets there, not blame us. That's an argument that's never going to end.
Yeah.
And then his excuse for going to Canada, do you know that?
It was also kind of the fentanyl situation as well, wasn't it?
Well, the most prominent quote that I took was, they would cease to exist without our surplus. Wow. Okay, that's so straight out. Now, he also hit back the same way kind of Trudeau did and spoke to the people of Canada, not the government. He said, we love the people of Canada. We love Canadians. Yep. We love working with them, et cetera, et cetera, et cetera. We don't like the way that your government's trying to manage, so we're going to do something about it. Now, if I'm a Canadian, I don't know if I like that. I don't know if I like an external party saying we don't like the way they're governing your country, so we're going to do something about it. That makes me go, hang on a minute. Like, this is a democracy too. We voted them in, right? But externally, that's what's going on there. Then he went to China with the 10%, not necessarily a tariff yet, just saying, hey, 10% is coming your way. Yeah. China's reaction was one that really interested me. See, Canada hit back. They were like, poof. Mexico hit back, right, verbally, and they said, we're coming with tariffs. They're going to figure out what they can do. China went more diplomatic. Essentially, they said, we'll talk about this at the WTO. We think we should actually be working closer together, not hurting each other.
I mean, yeah.
So, two things. Either they don't care, or this is detrimental, it's going to ruin them, and they're trying to be best friends and do whatever America wants to say.
Yeah. Well, yeah, they're strong points, because I think it's more the latter. I think that they kind of need it at the moment, because if you look at where China is at, they're struggling, right? They are struggling. So I don't think it's in their best interest to necessarily go against America. I think it's probably in their best interest to kind of stick with them right now. So I don't think they would necessarily be in a position to really go, now we're going to go and back and tariff you and start causing this huge trade war. Because if it did start kind of sparking off between the US and China, I think that would be a way bigger story than what it is at the moment with obviously Trump and his neighbours. I don't know whether Trump's got some kind of ulterior motive, because he's starting to call Canada would sound good as the 51st state. You know, we've already seen Google change the Gulf of Mexico to the Gulf of America. So I don't know whether there's kind of some ulterior motive going on there, obviously. But in terms of China's point of view, I don't think they can necessarily bite into it as hard at the moment. Maybe when they start to recover, you can actually see it's been affected across kind of like Chinese stocks and things like that. They actually haven't performed too bad in this situation. Not as bad as what people probably might have expected. They're the ones that have actually come out of it slightly unharmed. Other markets have felt it a lot deeper than they have.
Which this always interests me because so the way these tariffs work, if anyone at home hasn't been through a tariff war before, welcome. Take a seat. Welcome into the fun game.
Grab the popcorn.
The tariffs on imports don't like the exporters don't pay. Mm-hmm. Okay, so if I'm America and I'm going to put 25% tax on Canada, and let's use maple syrup, right? Canadians, maple syrup, that makes sense. It's probably a little bit racist, but I'm here. So let's go maple syrup. So if they put a 25% tax on imports for maple syrup, it's not Canada that pays that 25% to import it. It's the companies that pick up the maple syrup at the docks in America that pay that 25%. It's the supermarkets, it's Costco that pays that 25%. Now, if you think these major corporations are just going to cop it and go, this is good for the country, yeah, 25%, wrong. It's going straight to you. It is going straight to the consumer. So the next time you go to buy a nice bottle of maple syrup from Costco and you see that the price has gone up 25%, know that that's because of the tariffs. Okay. Yeah. Now, that's a prime example of how this works. If he's gone and slapped it on Mexico and slapped it on Canada, two of their biggest trade partners, Trump says, make maple syrup great again. Yeah, I like it. If he goes and slaps those on the two biggest trade partners, where fruit, fresh veg, like all of that trade is happening, even all the way down to timber and materials which Americans use to then build products which they then export. All that does is increase the cost for the consumer. Now, they're hoping that it increases the cost for the consumer so much that they stop buying that product, and then it eventually hurts Canada. The problem is everyone on the ground has to feel it first. Everyone on the ground has to make that difficult decision to go, that's no longer worth my money, which we've all felt over the past 4 years with this inflation going up. You look at a price of eggs and you go, hold on a minute, I'll go this week without eggs, right? That's essentially what's going to happen. And that's happening both in Canada, in Mexico, in the US, and they're also targeting China. So that all leads down to price inflation. It just does, right? It's just your cost of goods are going to go up, which means your CPI is going to go up. Now, if your CPI is going up, we've all learned how economics work over the past few years. The Fed will look to be more aggressive to try and control that inflation. So this is a direct parallel to what the Fed don't want.
Yeah.
Right. This, I do believe, will trip inflation. Now, Trump's also, on the other side, his way of battling this is dumping oil. He wants to dump the price of oil. If he successfully dumps the price of oil, we might find a nice middle ground where he actually pulls this off. But it's just this interesting dynamic where this trade war is going to get bigger and bigger. Canada and Mexico, the biggest trade partners. If that's not a message to every other country in the world that's a trade partner with the US, I don't know what is. These two are like, the three of them are like this. They're doing the World Cup together, right, coming up. Like they're and he's just going woof. I've actually got a quote here from one of the US chancellors for the UK, and this one hit home. He said, I would say to our allies around the world, watch closely. You could be next. In the meantime, stand by your friends.
Kind of sounds like a threat.
It sounds like a threat, doesn't it? That doesn't sound like a warning. Like that doesn't sound like a nice, hey, let's come together, let's work through this. It's a, hey, you're next. Line up, get ready. And it's tough to see. So then I'll have a look at, okay, this all makes sense economically. Let's have a look at how the market's reacting. That doesn't quite make sense to me. The Chinese stock market not being as bad, I can see because I don't think Chinese manufacturing is actually going to get hit that much because of still how much cheaper they can, like, companies can cop a 10% tariff and it be no problem. Like they'll just lose a tiny little bit of their margin, or a 10% increase on cost for a $3 item. Okay, take up 30 cents. Like you're going to be fine. Yeah. Canada and Mexico will definitely feel it more. Global stock markets are down. Even the S&P 500's down. Oz 200's down 0.4%. The DAX is down 1.15. The Nikkei's down 1.35. The FTSE's down 0.8. And the S&P 500 is down 1.35. The NASDAQ was also down quite heavy as well. Gold's flat on the day, but it did have a little bit of bullish push. Oil's gone up a little bit on the news today, which surprised me. US dollar index shot through the roof, which for me goes back to that whole inflation battle. The Fed, what they're going to do, how they're going to react. That makes sense to me. Now, how currencies around the world are reacting, that's where I lose traction. That's where I'm not understanding. And then just to throw it in the mix, because I've just dropped a lot of information on you there, John, so I'm going to throw it over to you in a minute. But just to throw it in the mix right at the end, futures market has increased the possibility of rate cuts come March. Hey, we got tariffs. We know this is going to pump up inflation. Let's cut rates. Is what the futures market now. It's still predominant. It's like 80% that we hold, but it was like 98% that we hold. Now it's I'm not fathoming why the futures market think the Fed will cut rates into something like this. Inflation does take time. You know, 6, 7, 8 months before it really gets felt in the market. But if you're expecting inflation to uprise in 8 months, you do not cut rates into it. That's just a silly decision.
I would say so. Yeah, I would say so. I think the one thing we're going to have to keep our eye on is probably core inflation numbers, because obviously CPI numbers are going to be all over the place, I feel, for the next while. Yep. So I think we're going to have to keep our eye on core. I think core is going to be where we're going to see the big changes in the pricing. I think if we see that it's gone to the point of where core inflation still remains fairly elevated and that holds a little bit higher, then I don't think the Fed will see the need to kind of cut interest rates. I think if that starts to fall quite considerably, I think that's when they'll start really going for it, and start kind of bringing those interest rates down again. But I don't see in these kind of conditions how you can cut. I just feel like maybe we need to kind of consider that this is the new norm for interest rates and that we should be held at this for a little while longer. But yeah, it's very interesting, the whole situation of how kind of currencies have reacted to this, how stocks have reacted to this. I think this is just an era of what's going to come for over the next 4 years, to be honest. We had a glimpse of it in 2018 when he started imposing those taxes those tariffs on China. Originally, we started to see obviously heightened volatility around those points, and then that kind of created these situations where we saw significant stock market dips, but then we just saw it ramp and rally again. So I feel like we're in that kind of moment right now. Is yes, this is good for headlines. This is good for eyes on the markets because it's going to cause a lot of panic initially, but I don't know how this plays out kind of going forward. I think, we did a video on Larry Williams' predictions, and one of his things was the good, the bad, the ugly, and how he saw the market as being one of those choppy, bullish markets. And you can see it kind of playing out. We've seen a very choppy start to the year. December was very bad. January kind of brought those moves back, and then end of Jan has been sort of very, very choppy. And I feel like that's going to be the situation going forward. We're going to see these tariffs being announced. It's going to cause market volatility. That market volatility is going to calm down. We're going to see stock markets probably head higher again. Again, there's going to be some kind of headline that then throws it out of whack again. So it's going to be very difficult in terms of that. From a currency perspective, it makes things very difficult, because if you're kind of being threatened of who's next. The UK at the moment seems to be going a little bit under the radar on this, because apparently Keir Starmer and Trump are getting on very well. So how or why this situation is happening, I don't know. Not saying that the UK isn't going to be felt with this, because obviously one of the UK's biggest trading partners is America or Europe. And obviously Europe are going to be taxed fairly, or tariffed, I keep saying tariffed fairly heavily. And that's going to obviously impact the UK in some way as well. But I think the UK at the moment's kind of not getting hit as bad. I think if you look across the board, sort of the pound, yes, has taken a knock, but it's not as aggressively down as most of the currencies at the moment. The big pain threshold that we're seeing at the moment is obviously Australia, New Zealand. They're getting absolutely crushed again. Which again, you probably play the narrative of, okay, well, if China's not going to be tariffed as heavy, surely Aussie and Kiwi might not feel the brunt of that as much. But we know that they are usually the ones that tank in sort of risk-off scenarios. So I think that's why they're almost getting doubly whacked at the moment.
I think the fear is he tariffs Australia and New Zealand. Now, we do a lot of different, predominantly military deals and stuff like that. But the hope that Australians have that we don't have to put up with any of this BS is Gina Reinhardt. Are you familiar with Gina Reinhardt? No, she's a billionaire mining woman. Built a massive mining empire. I believe it's BHP that she runs. She's quite close with Trump, invited to the inauguration and that People of Power meeting, and she's working quite closely with Trump and that ecosystem. So our hope is they won't tax our biggest industry, which is mining, which means it won't affect us too much because Gina Reinhardt's in that circle of influence. So as an Aussie, that's where we're sitting. But yeah, one thing that really caught my eye, like obviously Aussie dollar got stumped, New Zealand dollar got stumped, commodity currencies like the Canadian dollar as well, oofed.
Yeah, really,
Japanese yen held its own.
Yeah.
Held its own in a good way too, which I was like interesting, and I kind of thought about it. I was like, you know what, it makes sense.
Yeah.
If Japan can slide under the radar here, I could see it. Now we did our seasonal analysis webinar not too long ago. I trade ideas, and I very bluntly said I don't want to touch the Japanese yen, but I don't know. I don't know. I can see this working out. If everywhere else gets tariffed and they can just go about their business and work on their economy growing, like it could present an interesting opportunity because the US dollar got strong off this. The US dollar got really strong. Not against the Japanese yen. It actually gapped down against the Japanese yen.
Yeah. Well, I mean, the yen has that sort of safe haveny thing to it, doesn't it?
Over the past 3 years,
yeah. Well, this is the thing. I don't really see it being that, but because I guess it's because of the low interest rate and whatnot. There's a lot of considered stability there, I guess, and it's seen as a safer thing to be involved with as things come collapsing down. So yeah, the yen's going to feel a bit of a bullishness from that. I'm going to brag here, and I said, I was Swiss yen short last week, which played out very nicely for me because, when you say currencies that are going under the radar, the yen is definitely one of those that could go under the radar slightly. Whether they will feel some kind of tariff, yes, I do think so. I think we've got to also consider how Japan's economy might actually start doing really well. The fact that oil prices could be lower, if they're a big importer of oil, and if they start to see those costs being reduced, then that's going to benefit them as well. Say benefit them, it could obviously go into the fact that businesses will start performing better, wages may continue to increase. That's then going to continue to fight their inflation battle. There are some forecasts saying that actually Bank of Japan's interest rate could be as high as 1 to 1.25% over the next year to 2 years. That's a considerable move for them. We talked about that in the previous market wake up week ahead, and it was like, wow, that's really considerable move. So I would suggest that yen is probably a market where I'm very interested in this year. I think it's a market that's going to do that. They're going to perform pretty well. I've actually got a video coming out on Tuesday about that, so keep an eye on that. But yeah, I'm
going to distance myself from that analysis. That's John's analysis.
Yeah, this is my analysis. Yeah, but I think Japan could come out of this, or the Japanese yen could come out of this pretty well. Whether against the dollar, I don't think it's a good market to maybe go and trade it against the US dollar, because I think there's going to be so much volatility there. But I think if you can try and pair it with a currency that is a little bit weaker, or maybe something that is going to be impacted by tariffs that is obviously getting burnt. I mean, CAD yen is probably through the floor. I haven't checked it out, but I can imagine CAD yen is probably sliding at the moment. But things like that is where you're going to find some value as a currency trader, as an FX trader. You need to try and still find those opportunities where you'll see value. I liked dollar Swiss longs last week, simple because I see this tariff sentiment being bullish US dollars. What are the Swiss National Bank doing? They're cutting very aggressively at the moment. They want to try and encourage some kind of stimulus, and there's a possibility that they're going to go into negative rates. That to me is a sign that we're going to see some further Swiss franc weakness. So that's how I would look to try and target things at the moment.
I definitely just shared the wrong thing, so give me a second.
Yeah, no,
there you go. CAD Japanese yen.
Yeah.
So gap down, but aggressive push up throughout today. The Nikkei did get hit. Right? It's just going back to US dollar Japanese yen. I mean, you have a look at across these majors, Aussie dollar gap down aggressively, the euro oofed, the pound down, US dollar CAD up, like these big gap ups, these big moves. US dollar Japanese yen, not there. Not there, which is that's a story. You might look at that and go, it's not moving, that's boring. But trust me, if it's not moving, it means there's a story behind it. It means people don't want to buy the US dollar against the Japanese yen, even when they think the US dollar is going to be overly strong. That's an insight.
Yeah, absolutely. I was looking at some of the commitment of trader report data, wherever I have it, wherever it's gone. And I was having a look at the sort of fact that if we just kind of, if I just bring my screen in here, I was taking a look at the Japanese yen as a whole. And I was like, well, what's going on in that kind of realm, or what's going on in that kind of market? And if you look at sort of dollar yen from the non-commercial point of view, you can see that they're actually kind of selling into that market, that dollar yen market. The hedge funds are, so they're actively buying Japanese yen right now, and that kind of tells a picture, that tells a story over the net positions of a 52-week change. They are heavily sort of short dollar yen right now. Now that you might think, well, that's no help to me because dollar yen's doing nothing, but that's telling me that they're buying into Japanese yen, right? So you want to be looking at the potential for that to around those weaker currencies for me. That's what, and I would say that's where the action is right now. I would be looking at those kind of Japanese yen markets. Personally, that's not advice. That's just what I'm doing.
No, I can see it, especially if the US dollar wants to calm down over the next few weeks. If we deem this was an overreaction, the tariffs for Canada don't come in till Wednesday.
Yeah,
I think. So there is a chance that they renegotiate. There is a chance that they go, okay, let's not go down this route.
Yeah.
But we know from history that Trump's strong arm is not necessarily much for back and back down.
No. I think you made a really good point there. I think Trump is using this as negotiation. He's using this to get what he wants. So obviously one of the big things he talked about is kind of the fentanyl situation. I mean, I think that against Canada is a bit of a joke because Canada came out and said it's like less than 1% of the problem that's going on. So that was quite interesting to hear. But yeah, I think he's obviously using this as a tactic to kind of get what he wants from a country. He's hoping that the country will back down. And I think obviously being the US, they could probably hold out a little bit longer than some other places, especially the likes of Canada. They could probably not necessarily hold out as aggressively as what other nations might be able to. But I think he's using that as the strong arm tactic to get what he wants. As soon as he gets what he wants, then he's willing to, as the businessman, he is willing to accept the deal on a handshake, I guess, and be like, okay, yep, now you've sorted that out, I will get rid of those tariffs for you, no problem. And that's where I think that we're going to see these huge swings in markets. I think as the headlines will poke that fear into the market, you'll get those reactions. But I feel like some markets will recover quite quickly. I'm looking at sort of, the stock market at the moment. I'm thinking, is this a buy the dip now? Because we've seen that kind of huge move lower. Is that a buy the dip? I don't know. For me, I would say there's considerable risk in doing that. But at the same time, I was looking at, obviously we talk a lot about the relationship between the volatility index and the S&P 500. We saw it, volatility index spike last week. What happened? S&P fell. What happened? Volatility came off. S&P rallied. Is that the play this year going forward? It's okay, well, we get these volatility spikes off the headlines. Can we then go and try and play the volatility to the downside?
I think it's wise. I think it's wise to be aware also that they are going to be very common. The volatility spikes to the downside this year. So risk management, if anything, needs to be the main word for 2025. But I think the stock markets have their own problems. DeepSeek AI being one of those. Every massive US corporation has said they're investing billions into building ChatGPT replicas in their own version. Google's got one, Gemini, Apple's built one, and it costs XYZ. And then this little company from China called DeepSeek has built one with 5 million, which has just made everyone go, all these other tech giants have been spending billions on this. Like, why? They've done it with five. So you've seen the NASDAQ have that drop off, that fear, that also spike, and then it did rebound. But I think we're starting to shine the light on the over evaluation of stock markets. And that I like, because they're not worth what we're paying for them. They're just not worth that. They're good. Woof, great companies, but am I buying them at this price? No. It's like buying a burger for, I don't know, $48. You just don't do that. Why would you do that? Just make your own burger. So it's looking at that stock market as a whole is a tricky one. I think it's a year for commodities with different tariffs. I think if you can balance around which ones are going to get hit, which ones are essential, which ones are unessential, and where to place. I don't think it's a year for emerging markets. I think your safest bet is US dollar. I really do. I think your safest bet is the US dollar. If you're worried about what Trump's going to do, he's not going to sink the US dollar. So if you want to be aligned with the most volatile man in the world right now, well, invest where he's invested and hope.
Yeah, I mean, but saying that, if we, there is still an element of caution and risk around that, because, if we look at the US dollar's performance in his first sort of round, it was fairly poor. But at the same time, we're in different conditions now. You've got the Fed cutting into a growing market. You've got the fuel of tariffs. You've got the whole situation with oil prices as well. So I think it's going to be very interesting to see how this all plays out. I think in 6 months' time, we'll be looking at this going, what the hell is going on still?
It's got another 2024. That's good fun. That's good fun. Russell's looking for a short on the New Zealand dollar against the US dollar. That aligns with the US dollar analysis. But I want to wait and see, because for all we know, this attempt on Canada could be that warning. Could be, hey, everyone else who aren't as close as Canada, heads up, we're coming your way. It's time to start negotiating. It's time to start thinking. And it could be, the greatest way to send a message is to hit the closest partners. So everyone that was sitting there thinking, no, we've got a good relationship, are now sitting there going, oh boy. And it could be good. Could be good.
Could be very good. Could be very good. I'll be interested to see how this kind of aligns with. We've got German elections coming up, obviously, as well. I'll be interested to see how this kind of sways, because Germany needs some help. And if they're gonna get help, maybe they've got to start to kind of align with what Trump's going with as well. I think there has been some talks of the sort of I can't remember who's kind of heading into potential power there in Germany. The name has escaped me right now. But their party has been sort of more aligned with what Trump wants to see out of Europe. So I think this is the story that we're probably going to see this year, is going to be, we've got to just, for 4 years, stick with this man. Otherwise he's going to crush us, potentially. And I think that's where the story is at the moment. So
it's a weird. It's where Trump wants to be, but just knowing global governments might adjust what they're doing in order to suit that is just a concern.
And that's another story, isn't it? Because you've got to think about how are governments going to try and do this? Do they start to think about it? Okay, well, do we do something with monetary policy to try and balance out the tariffs? And then it goes all into that kind of situation.
The big question is, how do we get consumers to pay for this?
Well, because that's it's us. We get crushed, right? This is how this is going to play out. This is how it's going to play out. But I'll be interested to see how it kind of goes on with what monetary policy is. I think it's obviously going to be those years of fiscal policy is going to be very important. We went through a period of it not being very important. When, the Biden administration came in, no one really cared. No one really saw any kind of movements from that, whereas Trump is very vocal about what he wants to do, what he wants to achieve. And I think the narrative has switched slightly from that balance of, well, what do you focus on? Do you focus on the fiscal? Do you focus on the monetary? Now, if you were looking at it just monetary alone, you're like, what the hell is going on? But that's because the fiscal policy is just knocking everything out of the park at the moment. And I think that is the narrative, unfortunately, going forward.
No, I agree. John, it's been an absolute pleasure. Everyone at home, I hope you've enjoyed it. We had a good question there. Great discussion today. And I agree. It's been one I'm looking forward to. Change of plans a little bit. I've got a video coming out straight after this. So if you've not hit the notification button on our YouTube channel, make sure you do. There's a seasonal play happening this week on the Euro that you need to know about. So I'm going to put that video out straight after this. So make sure you're subscribed, you've hit that notification bell, you'll be told. Weekly newsletter, 2 videos a week, plus a live stream. Get everything you need to know about the macro Forex and commodities world right here on Market Wake Up. John, enjoy your trading week, and we'll chat to you once again next week. Cheers.
Peace.